This video will discuss the indirect method of preparing the operating activities section of the statement of cash flows. Recall that there are two methods by which to prepare the operating activities section on the statement of cash flows, the indirect and the direct methods. This is an example of the indirect method. A company's net income is the best measure of their operating activities for the period. But the net income is calculated based on accrual accounting that records revenues when they are earned and expenses when they are incurred. So this net income doesn't necessarily reflect the amount of cash that was received or the amount of cash that was paid from operating activities. So we go through a series of adjustments to convert the net income to a cash flow amount to report the amount of cash either provided or used by operating activities. The series of adjustments begins with adding back non-cash expenses, such as depreciation, depletion, or amortization expenses. Then we add and subtract changes in non-cash current assets and changes in current liability accounts during the year. Then we add back any losses that did not involve cash, such as a loss from disposing of long-term assets or a loss from the retirement of debt. And we subtract out any non-cash gains from the disposal of long-term assets and debt. If we take the net income and add and subtract all these adjustments, and if we are left with a positive number, that means that overall, operating activities provided cash during the year. In other words, the cash coming in exceeded the cash going out from operating activities. If I take net income and add and subtract all of these adjustments, and I end up with a negative number, it indicates that overall operating activities used more cash than they brought in, resulting in an overall cash used by operating activities. Looking at an example of the application of the indirect method to calculate cash flows from operating activities, we are going to use ABC's information provided here. ABC, on its income statement, reported $125,000 of net income for the year ended December 31st, 2019. They had one non-cash current asset account, accounts receivable, which increased $7,500 during the year. They had one current liability account, accounts payable, increased $10,000 during the year. And during the year, ABC reported $12,500 of depreciation expense within its income statement. We are going to calculate ABC's operating cash flow for the year 2019. Very first thing we start with is net income, straight from the income statement. Then we begin adding and subtracting our adjustments. We are going to add back any non-cash expenses, such as depreciation, depletion, bad debt expense, or amortization expense. These amounts would be reported within the income statement, and that is where we would locate information regarding non-cash expenses reported during the year. So we are going to take the net income and add back non-cash expenses. ABC had depreciation expense of $12,500 during the year. Next, we look at non-cash current asset accounts. ABC had an increase in accounts receivable during the year. Using our guide, we know that if a non-cash asset account increased, we need to subtract the amount of the increase. We look at the change in the accounts receivable balance from the beginning of the year to the end of the year. It increased $7,500. The indirect method says we need to subtract that $7,500. The next adjustment to be made using the indirect method is to look at current liability accounts. ABC had a current liability account, accounts payable, that increased $10,000 during the year. The indirect method indicates we need to add back the amount of the increase in the current liability from the beginning of the year to the end of the year. The last type of adjustment we need to make would be to add back any losses or subtract any gains that were reported within the income statement. ABC did not report any gains or losses, so in this example, there were none to adjust net income for. The final step is to take net income, add and subtract the adjustments to get to the cash provided by operating activities. After we added and subtracted all of these adjustments, we were left with a positive number. That positive number indicates overall operating activities provided more cash than they used, resulting in cash provided by operating activities. If we had added and subtracted these adjustments to net income and ended up with a negative number, it was an indication that the company's operating activities used more cash than they provided. We would have ended up with cash used by operating activities. In summary, to use the indirect method, we start with net income, add non-cash expenses, look at current assets other than cash, add any increases in those non-cash current assets, add in decreases, subtract any decreases in current liabilities, add back any increases in current liability accounts, add any losses or subtract any gains from the disposal of long-term assets or the retirement of debt. When we adjust net income for these items, we are calculating the cash provided or used by operating activities.